I'm Hugh Menck from McGee's Property Brisbane. There's been a lot of external factors influencing Brisbane's commercial real estate market this year, so we thought it was important to provide our clients with a snapshot of what's been happening in the investment sales market, what sector is showing the strongest growth, and what does the forecast look like for the rest of the year. At the start of the year, we saw a noticeable pickup of investment activity for office property in the CBD. This has been driven by the high number of employees returning to offices and the opening up of international borders, making it easier for offshore investors to make decisions. It's been fantastic to see the increasing level of confidence from both occupiers and investors back into the office sector. We also see continued very high demand for mainstream alternatives such as childcare, quick service restaurants, fuel, medical and self-storage. Investors of these properties continue to be attracted to the traditional long leases, quality of the tenant covenant and essential services nature of the investment. And finally, industrial property. Industrial property still remains a hotly contested asset class off the back of strong tenant and occupier demand. Rental growth for warehousing and last mile logistics continues to increase, and property yields have been driven to all-time lows as more investors continue to buy into the sector. One of the biggest growth sectors within Brisbane's development market is build to rent. For some, build to rent is a new concept. Put simply, build to rent are residential projects which are owned by a single owner, typically an institutional investor, and are professionally managed. Build to rent provides investors with a bankable cash flow and exposure into the residential sector outside of traditional investments like office, retail and industrial property. In Brisbane, there are a number of build to rent projects under development, including 2 public-private partnership projects in Fortitude Valley and Newstead, which are bringing in a total of 750 apartments to the rental market. Currently, the residential vacancy rate in Brisbane is 0.7%. There's simply a lack of available property for rent. Build to rent will help fill that void and also cater for a large portion of the market that are comfortable renting and wanting long-term secure accommodation. The high demand locations for build to rent in Brisbane are South Brisbane, West End, Woolloongabba, Fortitude Valley and Newstead. Brisbane is at the start of the build to rent cycle, and we see a lot of opportunity for investors and developers to participate in this exciting sector. We're confident about the fundamentals of the Brisbane market, and whilst government stimulus and low interest rates have been a major contributing factor to economic recovery, the underlying market sentiment remains very positive. We believe there will be continued strong demand for income-producing assets, whilst development sites with pre-commitments will be preferred, with values being determined on a risk-adjusted basis. Despite the headwinds of interest rates rising, challenging construction market and fragmented recovery for certain businesses, we foresee Brisbane's commercial real estate market to be robust and resilient and a preferred destination for investors and developers.